Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Friday, and the Nasdaq has recovered, which is a good thing. It wasn't a good thing for one of my spreads on that I had out there on Roku. Roku did a lot better than I thought it was going to do, but had to close that one. A little bit of loss there, but my Beyond Meat spread, boy, that did well. It was taking a nosedive, so that was that was a good thing. Made some money on that one. Okay, well, let's get into it. Let's get into some of the slides here. Let's see, I pull that up. There we go. Okay, looking good. Okay, so basically, where we, it the Nasdaq is leading a rally. Boy, that's a good thing. I'm glad it's coming back. I was a little bit concerned there. We're still under pressure, though, as you can see. We're still below that very, very key level, which is that $14,000, the 14,000 level on the Nasdaq. We're still below that, but we're up 0.87%, which is a good thing. As you can see, it looks like, the Nasdaq came down. It touched the more than touched the 50-day moving average, and it's bouncing up. So that is a good sign for the future. So I'm hoping that we could get back to that. But even with the Nasdaq bouncing higher, the movement has been away from a lot of the Nasdaq stocks into some of the other stocks. I just bought some more I just bought some more Rio Tinto this morning, and Rio Tinto's been doing very, very well, as many of the other stocks that are in kind of the basic opening economy type of trade. Right now I have two oil companies, Matador and Pioneer Natural Resource. Pioneer Natural Resource is going to be announcing earnings here. And I've got these mining companies. I've got Rio Tinto, and then I've got some construction companies. So I've sort of moved from sort of the more I've moved away from some of the Nasdaq growth type stocks. I still have a lot of Apple, but I have moved away from those, and I'm moving into kind of the reopening hard asset type of stocks, and that are primarily in the Dow and in the S&P. Just wanted to show you a chart for the Nasdaq. As you can see, we came down, we bounced, which is nice, and we're coming up today. Hopefully we have reverse trend, and we're going to move back over that very key 14,000 level. And I hope if we do that, because that will mean that we're sort of back, and the market will not be under pressure until we get back to where it's actually moving to a higher high. The market is still under pressure, so you want to be careful with your investments right now. Try to be, currently I'm about 50% in cash, and I'm kind of waiting for some more opportunities. I'm trying to pick the opportunities off as they happen. But that's a good sign that we've made that bounce. I was a little bit concerned that we would crash below that 50-day line, and then possibly go down to as low as the 200-day moving average. So this is a good sign. We'll see what happens on Monday, but it's looking like the session towards the end of the day is looking pretty good on the Nasdaq, which is a good thing. The Dow is also at a record high right now, so that's a very interesting thing. So, the money seems to continue to flow into the market, but it is sort of sloshing around, and it's moving from some of the big tech names still into the other one names. John Deere, which is DER, is going to be announcing next week, and that ought to be a very interesting announcement, sort of a bellwether for some of the bigger industrial type stocks. Just want to show you an interesting stock that's on the move. Now, this is a sector that's been getting a lot of love as of late, and that is the Ethan Allen Interiors. It's up today 2.93%, which is tremendous. The volume is also up strongly, 96%. This retail group, especially the home furnishings, has been doing good as of late. So if you're looking for kind of places to park some money, this might be a good area to kind of look in. And but anyways, Ethan Allen Interiors, symbol on it is ETH. Also wanted to show you the upcoming stocks that are going to be announcing earnings basically in the next few days. And what I'm going to be doing for everybody that's on the that's on the Discord service, the Vinny Discord service, which is available at vinny.com. Let me put that up there. I'm going to do some of these more of these earnings plays because they can be, if they go right, they can be very very profitable. So I'm gonna be putting out for those people that as well, and I'm just putting up on the on the YouTube feed the address. It's www.vinny.com/u/Dallas Trading Floor, and we're going to be having some more of those earnings trades coming up. But right now, the stocks that are kind of key interest that are coming up, Diamondback Energy is is going to be reporting in about 19 days. That's an interesting one. A fertilizer stock, IPI, Intrepid Potash. This one probably is going to do very well. It's in the agricultural chemicals area, very unusual. Also in the chemicals area, in 5 days, we're going to see the report from Mosaic. So this is going to be key. These are not very. This one has been up to earnings per share this year on Mosaic have been up 983%. So this is something you want to look at. It's got a comparative strength rating of 99, which is the best you can get. So that's another one we want to kind of take a look at. It looks as if Lyft, L-I-F-T, which is going to be reporting in 5 days, it looks like they are weakening. So we may be doing a bear spread on this one based on its weakening group. Also, Match.com is in 5 days, and it is also weakening. So this is kind of an interesting way to look. Now, I'm currently only in one of these stocks, and that is Pioneer Natural Resources, which will be announcing basically in 5 days. And this one probably will do well. The oil and gas group has been doing well as the market has been shifting there. Just want to cover one other thing. Basically, the stock market rotation is continuing, and that is the rotation out of some of the stocks, some of the stocks that are in the Nasdaq, like your Microsofts and things like that, into these more kind of old-fashioned stocks like the metals. As I say, I bought a full position in one of my portfolios for Rio Tinto, RIO, and it's sort of moving into there. So basically what the big boys are doing in the funds, they're cashing in their chips and they're moving them over to they're moving them over to more of the sort of the non-growthy type stocks, but that have solid earnings that actually have assets. So it's a movement from some of the growth stocks into some of the asset-based stocks. So that's kind of an interesting thing that's going on right now. I mean, in the market, and you definitely have to be aware of that. So before we get to the questions, thank you so much. Let's see if I can put up this really quick. And it's coming up. There we go. All right. There we go. Okay. Yep. There we go. Okay. And let's see. So there we go. Okay. So now I can see the stuff about Doggy Coin. Everybody likes that Doggy Coin stuff. Thanks for watching there with the Doggy Coin. Let's see if I can pull my stand up here a little bit. There we go. That's probably a little bit better. Yeah, there we go. Yeah, that's a little bit better for my friends over on TikTok. All right, so let's go to the questions and let's see. Okay, let's see. Roku is on uptick today. I want to start a bear put spread. Is it a bad idea? Yes, it is. I had to close mine this morning, and it's. I think you're absolutely right. I think you're absolutely right on that. I think it's time to, I kind of made a miscalculation there on that one. It's probably best not to do the bear put spread on that one. The Beyond Meat bear put spread worked fantastically. And I think that the one on Peloton, which announced a huge recall, and Peloton is also going to do very well as well. And I think Dado Dog is going to do well, but I wouldn't be in the Roku spread. So kind of, I'm kind of glad I didn't send that out to everybody on the Action Trade Alerts. But so that one probably you don't want to be in right now. I don't think it's going to be I don't think it's going to be that good of a trade right now. So that's kind of that's kind of the long and the short of it. All right, question on doggy coin. People really like the doggy coin. Let's look and see how doggy is trading today. So I'm going to go over there and um, put in doggy coin, and let's see. Okay, let's go to the official doggy coin site. All right. Well, does it? That's getting started. Okay, so what it is? All right. Well, okay. So let's see if I can get a real. Yeah. Let's go. We'll get a live chart on doggy. Okay. Yeah. Here we go. Let's see what we're looking like now. All right. Very good. All right. So I'm going to go over here to kind of everyone to show you. And by the way, if you're on the if you're looking on TikTok, you can jump right over to show, and I could be showing you the charts. I can't show them on TikTok, but I can show them on YouTube. So that's kind of what I'm doing right now. I'm showing everybody the chart on YouTube. If you're on TikTok, it's super easy to jump over to the screen where I'm doing the live feed for Doggy Coin, and that is basically at this address here. YouTube.com/Stellus Trading Floor. So just go to that address and you'll be able to see kind of what I'm doing with Doggy Coin. Okay, well, it looks as if, at least for today, the price is up, but the volume is flat. I'd be a little bit careful buying when the volume is not increasing. I want to see the volume move above about above about 20 billion. I want to see it move above that. When I start to see a spike, then I'd be more interested in getting in. Right now, the price is moving up, but the volume isn't. I'm a little bit concerned about that. So I probably would be on the sidelines until we made probably a doggy coin was up at about the $65 level. That's kind of where I want to get back in. Now, currently on doggy, we are basically we're up solidly 9.21%. We're at 63. So I think that if it hits 65, that's where we might want to start moving into it a little bit. So let's look at the 1 month chart. Yeah, as you can see, that's the significant at 65. That's sort of kind of where it looks the best. So let's take a look at the 6 month chart. So it's just really spiked up here, but it looks like it's gotten support. So if it moves above that very key 65 level, then I think you probably could move into it. I'm currently not in doggy coin, but this is kind of giving you the day chart. We started out basically at about 62. We moved all the way down to about a 53, and then we moved up, and now we're kind of, it seems to be settling. There seems to be some resistance right at about 63. So you definitely could make some money in doggy coin. But right now, the trend, at least on the show is going, is downward. So what I want to wait a little bit until I see that volume pick up. That's the volume here. Kind of want to show you that. Right now, the volume is flat. If the volume is moving up, that's when I want to be in it. So right now, at least for right now, I think the key level on this is about 65. If it moves above about 65 cents, then I think you can probably do some stuff with doggy coin. So there you go. Doggy coin is going to $3 this weekend. Well, maybe it is. That would be incredible if it did. If it did, boy, I tell you, that would be something else. I'm going to share it with everyone, the screen for the TikTok feed. So Beyond Meat, you nailed perfect. Yeah, well, Beyond Meat was kind of obvious with the chart, unfortunately, but I shorted it. Basically, I didn't short it directly. I shorted it with a put. I did a put spread on Beyond Meat, and it just kind of, unfortunately, it just kind of fizzled. But I did close that trade today. We made some good money on it. Unfortunately, I had to pay out all the money that I made because I also was in a Roku a bear trade. So I closed the Roku bear trade. I used the money that I made on my Beyond Meat bear trade to kind of cover the thing. So hopefully, my two other bullets in my belt are going to make money, and that's the Peloton trade, which is a bear trade, and also the Datadog, which is also a bear trade. So, but I did put a very nice, what they call butterfly spread on Federal Express today, which I think is going to do fairly good. So hopefully I'm going to bring that to everybody that's on the Action Trade Alerts. Very easy. If you're watching on TikTok, very easy to get on the Action Trade Alerts. Just go to my profile, hit the link, and I just need a first and last name and an email address where I can send you all this good stuff that all these trades that I'm doing. And so I thank you very, very much. So let's take a look at some of the other people that are on TikTok. Welcome to TikTok Live. Okay, hello, Doggy Coin. Okay, so we've really covered Doggy Coin. So let's kind of go back and so look at my other friends on YouTube, and they're asking questions as well. Okay, very good. We talked about Doggy Coin. Airbnb. Okay, though that's kind of a favorite. I haven't been in Airbnb. This is one that I do like long term. I really like Airbnb in long term as a long term company, but it's I think it's going to be a little bit difficult to trade. But let's bring up the chart and let's see if there's any entry points that we can find for Airbnb. And of course, the symbol on Airbnb is ABNB. So that's the symbol. All right, let's go to some of the questions. I'm still trying to pull up yeah, there we go. Okay, sometimes it has issues when I'm sizing these charts and they don't quite work as well as I would like them to, but ABNB is, and by the way, for everyone that's looking on TikTok, basically, unfortunately, I can only broadcast these on YouTube. So if you could just jump over to YouTube, it's essentially the simulcast, and it's the same. So here we go with Airbnb. All right. Well, Airbnb is still in this very, very strong retreat. Okay, and it looks as if we're going to have earnings in 6 days. This may be a good candidate for a bear trade. It might be good to kind of possibly own some. It might be good to possibly own some puts on this one. It looks as if, I don't know. I'm going to have to, kind of analyze it a little bit more. But it looks as if the checklist is not as good as we'd like at 33%. The industry is fallen too. It's 138 out of 197. So the institutional money is moving away from it right now. Now, long term, I think this is a winner. But right now, it's a little bit different. They've got some very big companies in here that are owners. There's Barron Asset Retail Fund. This is a good one. MFS. These are all very, very strong funds. So I don't know if it will fall. I don't know if it will fall as much. It may be. It may be just kind of this dead cat bounce. But this is the overall trend, and it's not the kind of trend we want to see. It's a downward trend for Airbnb. So if you were to buy it now, if it falls below this key 150 level, it's probably going to fall lower. Now, it originally IPO'd at 58. It's currently, it originally IPO'd at 58. So there's still a lot of people in it, but there's, anytime this thing goes up, there's a lot of what they call overhead supply. There's a lot of people that bought it and then wrote it up, and now it's sort of starting it's pulling below it a little bit. So I do believe that this is probably going lower in the near future. That's my guess, and I probably going to try to put together a bear put spread. It's got a relative strength line that is pointing downward, and this is not good. See, this is the blue line here. It's pointing downward, and it's a 14 relative strength. So here's what I would do. If you're going to buy the stock itself, I'd be very, very careful with it right now. It's in a downward trend, so you don't really probably want to buy it as it's moving lower. I'm looking basically to, it's going to have earnings in about 6 days. And when it has earnings, it's probably going to, it may pull up a little bit, but then it's probably going to continue its trend downwards. It just depends on whether or not, in the next few days we see it get any support. And if we were going to get support, it's probably going to come, right about 150. Right now it's 150.90. So if it can hold this, it may reverse and go higher. But if it cannot hold this 150 level, then it's probably a short after basically into earnings. It probably is. So there's a number of ways that you can short a stock. I don't necessarily recommend this, just for educational purposes only. I mean, if you I don't recommend shorting the stock outright, but you might want to do a put spread on it, which can limit your risk. And I cover that, of course, at in the Discord room. We cover those kind of plays. And then also I do now and again put out alerts on some things that are good to do that with. So this might be a good, this right now I wouldn't be buying Airbnb because it is in a downward trend, but it might be a candidate to possibly do a put spread on that might kind of synthetically short it. So there you go. All right. So, Kate, thank you very, very much. Looking at DKS, this is Dick's Sporting Goods, by the way. This is a great company. Academy Sports, ASO, reported, and it was looking very good. So this is a good sector right now. People are like, they're tired of being cooped up. One of my best stocks right now is a stock called MZO, which is called Marine Max, and it's just been doing great business. So I think Dick's might be the way to go. ASO, which is a competitor, had a very, very good report. This is looking very good, Kate, by the way. Now, it's not really necessarily in actually a totally, perfect buy zone, but it's got a relative strength of 91. And look at this relative strength line; it is moving higher. And this is something that I always look at here: is the relative strength of the stock against the market. And currently, as you can see, this is the blue line here, not the black line, but the blue line. It's moving higher, and it is trading above its 10-day moving average with strength. So that's looking very good. It's up 2.10% today, which is very strong. Let's look at the weekly chart, kind of to give you an idea of how strong this rally has been with DKS, with Dick's Sporting Goods. Can it go higher? Well, you know what? It's up $7.09 this week. So probably it can. Do I recommend anything? Well, no, because I can get in trouble with the powers that be if I do that. But this is looking like a very good stock, Kate. It's got earnings in 19 days. So, we're buying it outside of earnings. Now, here's kind of the rule that I do. I don't like to hold stocks through earnings. I like to buy them into earnings. So if you're buying the underlying stock, what I would kind of recommend doing is, if you're buying it right now, I buy it relatively, today or possibly Monday, and then right before earnings, sell it, and then see how it does. Now, if you're using options, and I use options a lot of times as we move through these earnings, I like to use options to do this because it limits the potential risk. That's the main thing that I'm looking to do, is limit the risk. But this is a good stock. This is a good chart, and it's going into earnings. I wouldn't hold it through earnings because you never know what's going to happen on earnings. It's always a mystery. Sometimes I think it's going to, it's a slam dunk that's either going to go up or down, and I'm totally wrong. So, but this is a really, really good stock. Dick's Sporting Goods, highly recommended. The retail sector has been just very good as of late, so that's a really good choice. If I was going to buy it, though, I'd buy it quickly and then sell it, and then basically hold it, but sell it before the earnings come out. All right, MUDS, MUDS. Let's look at Louisiana Pacific first. Louisiana Pacific has been doing fantastic. It's in this timber group. So LPX is a really good stock. I don't have it, unfortunately. I had West Fraser, which is basically in the same group. This has been a tremendous area, and you wouldn't think so. I mean, lumber. I mean, who would have thought? I mean, that lumber would be doing so well, but it is doing fantastic. And it just went through earnings. It looks like it's up $7 today. On the week, it's up 10%, which is incredible considering this is a sawmill company and it's up that much. Unbelievable. But look at this daily chart. It's beautiful. It's right above the 10-day line. Could you buy it here? Well, you know, I would like to buy it at this point. I think, I wouldn't buy a huge position here, but there's some very good things going on with this stock. This relative strength line is just stellar. And look at the group that it's in. Boy, it's in the wood products group, which is 21 out of 197. So this group is doing great. Would you buy it here? Well, you know what? I think these guys have all the pricing power in the world because everybody wants to build houses and there's not enough lumber. So pretty much they can kind of ask what they want on the lumber prices. So I don't know. This could be a very good buy. Would I buy a whole position? No. And there really isn't a formal buy point on this one because it's just been moving up so quickly. What I would really like to see, and I don't know if we're going to see this, is that wait and see if it pulls back to the 10-day line, and that's where I would look to possibly buy it. And this is going to be tough. I mean, right now that today it's moving up. So, if you bought it, I would try to see if it pulls back to about the 69.50 level. And I don't know if we're going to see that with this stock. And if it reverses off of that 10-day line, and that's basically right here, this is the 10-day line. If this thing pulls back and it bounces off of this little pink line here, that's where you want to buy it. But that's going to be tough. I'll be honest with you. That's going to be tough. This thing has been a rocket ship, and it looks like it's going to continue going up. So hopefully there'll be a slight pullback, maybe Monday. I wouldn't buy this right now. It's all the way at the top of its range. It's just So looking at the 5-minute chart, and I'm going to pull that up. Basically it's at 73. So here's the thing. I mean, you could buy it at this level. It's a little bit extended, but I wouldn't buy a full position. But you possibly could do that. There's really no great buy point, unfortunately. It's just been such a good stock that it's really hard to get a good buy point on that. Okay, let's look at MUDS, MUDS. Right, MUDS. And take a look there. That's Murdoch Capital. You know what? Okay, so this is a blank check company. I'm not really good at blank check companies, and I think they're highly risky because they don't have. It's funny, Levi. This is sort of the polar opposites of Louisiana Pacific. Louisiana Pacific is what I would consider a total asset-based play, and it's a good one. Murdoch Capital, I don't know what they're buying, so I'm really not sure. They're looking for distressed companies. And, there definitely are some out there, but you know what? I just would pass on this one. So MUDS, I'd probably pass on just because I think that it's not going to give you, it's just, I think for me, it's too hard to play. So I probably would be, not in it. All right. We have a question from TikTok. So let me pull that up here. We have a question from TikTok from Nokia. That's Noke is the symbol on that, N-O-K. I'm going to try to pull that one. Nokia is, I don't know. This is a tough one to play because, everybody knows about Nokia, and it was once a great company, but it's kind of like Sony and television sets. I have a Sony television set because I'm old school, but if I were buying one today, it probably wouldn't be a Sony. It'd probably be something else. Nokia is just, it's not really doing anything. It's just a cheap stock with a potential for a short squeeze. Now, what is a short squeeze? I got some comments yesterday. People wanted to explain kind of what is a short squeeze. Well, what a short squeeze is, and I'm going to kind of illustrate this for you, is that you look to see kind of what the amount of short interest is. Right now in Nokia, there's a lot of short interest, meaning that there's a lot of people shorting this stock. What they're doing is they're borrowing shares and then they're selling them, hoping that the stock will go lower. Right now it's at $5. They're basically hoping it'll go down to to $4. But if the stock goes up, then they'll have to cover their shorts, and that may cause a short squeeze. So that's the reason I think everybody's so interested in Nokia, because Nokia, and I haven't been checking the Reddit rooms myself, but I believe that this is setting up for a short squeeze. Now you can make money in short squeezes, but they're hard to trade. Okay, but here's how I would trade Nokia in based on this weekly chart here. Right now, and we're after hours, it's selling for over $5 a share. If you're going to play this one, you want to buy you want to buy it at very maybe at $5, but you want to place your stop loss very tight within 2% of that. So if you bought it at $5, you'd want to put your stop loss at about $4.90. And then if we get a short squeeze, and it looks like we might, because basically looking at this chart, looks like it's setting up for a short squeeze. If we get a short squeeze, then it'll rocket up. Now, as it's rocketing up, you push your stop loss up, and then boom, it will then dissipate, poop, and go down. And then hopefully, if you have your stop loss here up, like maybe at 10, it will sell you out. So that's how I would play. That's how I would play Nokia. I wouldn't buy this for investment, but if you're looking for the short squeeze, this might be an option for you. So, this might absolutely be an option for you. All right, so great. Let's see if I can get okay. What's your thoughts? What are your thoughts on the more sell side? You know what, Cheat? I really believe that we're going to see some more selling. Not, I don't think. I think the overall market for right now is at least somewhat stable. Okay, but it's not stable in the techs where we all like to play. Many of these have been selling off. I mean, take a look at Beyond Meat. It was an assassination when they came through earnings, and it's probably going to go lower. So money is moving from these frothy stocks into sort of what I consider kind of the more how can you say it? They're sort of value stocks. That's why the mining stocks are doing so well. That's also why some of the shippers are doing well, and that's why the agricultural chemicals are doing well. These are areas that, frankly, I never really trade. Why? Because we've been in a growth market for so long. But right now, the market is changing. If these taxes go through, and it looks like they're going to, then the interest rates go up. If the interest rates go up just a tad, all of these growth stocks will have a lot of trouble making new highs. So that's what a lot of the big funds are doing. They're moving their money they're taking their winners and they're taking them off the table. They're selling those. They're taking the money and they're putting them into what they call, really hard asset stocks that will benefit from higher inflation. Now, many people in the audience here have not been through high inflation. I have to admit, I'm kind of old. I've been through high inflation, and this happened during the Carter administration. And I remember, when inflation was running like 17%, you'd go to the grocery store, and then, the next week it would be more. I just filled up my gas tank last night here in Dallas, and Dallas has some of the cheapest gas prices in the United States. I paid $2.69. Well, you know what? I was paying $2.19 just about 3 months ago. So that's a lot of inflation that's going on. That's a lot of inflation, and the stocks that are going to benefit from those inflation is going to be the oil stocks, some of the stocks in the mining area. Copper is very much in demand right now, and so those kind of stocks are going to be doing very better, frankly, than a lot of the other stocks, like the Beyond Meats of the world. They're just, so that's that's probably what's going to happen. And so that's how I try to take these 60% or better shots at this. So that's kind of my feeling on that. Okay, so that I do think that it's not really a market sell-off. It's more of a repositioning from the tech areas that have been sort of frothy over to the areas like the metals and mining and the oils and those kind of stocks, where basically it doesn't matter what company is out there. It just matters if they have it just matters if they have money in the ground. Let's look at XRP. This is a question from TikTok. XRP. And if you're on TikTok and you want to take a look at the charts that I'm looking at, super easy to do. You just go on over to you just go to this address, youtube.com/Dallas Trading Floor, and that's how I'm that's how I'm doing it right now. All right. Well, we have okay, interesting. So it's interesting. So three made book. Oh, okay, good deal. Thanks, man. I always like it. I always like seeing it when people make money. I really do. So that's great. So you. Let me pull this up. Oh, goodness, share screen. Hopefully you'll tell your friends that you did make some money, and I don't know if it was my idea or yours. I don't know, whatever. But I think it's great. So Jimmy Gibbs Jr. I'm gonna, if you don't mind, I'm gonna take a screenshot of that just so I can show you that. There we go. Yeah, he's gonna do that. Boop. All right. So I'm glad you made money off that Beyond Meats, but I wish I had gone in harder on it. I really wish I had. But it is what it is. So I mean, I only had two contracts on that. So, but it was a spread, so let's protect myself. So great. Congrats, man. I love hearing it when people make money. That just makes my day. Would it be possible for Tesla to pull back up to 680? Yeah, I mean, absolutely. Anything's possible. Yeah, absolutely, absolutely, it's possible. Let's kind of take a look at Tesla and do a little analysis on that. TSLA, of course, is the symbol for Tesla, and I am a Tesla bull, so I'll be I'll be straight up with you on that. I just think that right now there's a lot of overhead supply in the stock, and it's just hard for trade right now because it's just in a place where it's difficult to trade. When I'm talking about the overhead supply, if you notice, this is the weekly chart that I'm looking at here. You'll notice at the $800 level, see if I can get the pin up there. There we go. Okay, so notice at the $800 level, notice how there's all of this price action above 800. Well, basically what happened is that, as people were buying, they were buying above 800, but a lot of those people didn't sell, but the price dropped. So this is what they call overhead supply. So every time the stock price gets up, anywhere near that, what happens is these people up here sell. So this is what they call overhead supply. Right now, unfortunately, the relative strength line for Tesla is 92, and it's pointed downwards, and we don't like to see that because that, unfortunately, is not good. Also, one thing you have to be concerned about is right now the automobile manufacturers group is 118 out of 197. Well, what's happening is that it was the automobile manufacturers group was doing so well, and then Ford announced that they were going to have some trouble, and it took the whole group, and now the automobile manufacturers group is underperforming the market significantly. So money is moving out of this general sector, making it more difficult for Tesla to regain its former level. What I think is going to happen is we're going to be, at least for a while, with Tesla between a consolidation from about here 780 of in a consolidation really from about this 591 level up to 800. So right now, unfortunately, the trend is downward. So I wouldn't be buying into Tesla right now until it probably bottoms, and I think the bottom is about 591 or so, or 600. So I think it is going to pull back to this level, and if it bounces there, then I think we can be back in it. But it's very painful because if you don't want to hold like this, because if you're holding like this, it can be extremely painful. So if you're down more than 7% in Tesla, consider selling your position and waiting for a better time. I do think it's going to pull down to about 600 and possibly below that, but I do think it will reverse higher eventually. But right now, that's sort of what it's telling me. It's looking like, the last true buy point on Tesla was 502, and of course I did buy on that as well because it was a true buy point. But it looks like it may be all the way back down to that before it reverses again. I do think it is going to continue higher, but I do think it's going to pull back at least in the short term. So be very, very careful. Very, very careful on Tesla right now. It's just tough one to trade. Let's look at DraftKings DKNG. Now this is a great stock because It's in an area that I think is just going to be huge, and of course that's online sports gambling. And I do think a lot of a lot of the NFL owners are in this in this one. DKNG helps if I spell it right. There we go. DraftKings. Yeah, see, DraftKings is pulling back like a lot of other stocks in this area. Now, it's not quite as the leisure gaming area is holding up as a sector much better. But here's something that we have to be concerned about. Uh, DraftKings pulled below this very critical line here. This is the 200-day moving average. Now, I do think that when this reverses, and I do believe it's going to reverse, then we might have something. But right now, the trend line, and I'm going to draw a trend line here, is like this. So if we don't, I'm going to set an alert on that trend line. Yeah, there we go. I'm going to set an alert on that trend line, but it needs to pull above this line before I'm even interested in it because it looks like it's fallen off of the 50-day and it's moving down to the 200-day. So right now, with with DraftKings, I don't think it's a good entry point for DraftKings. I think it's just going to be very very hard to play it right now. But I do like the stock, and I do like the stock, but I'm not in it, and I want to see if a reversal on it, at least for right now. All right, so LPX looks like, yeah, I think it is Jeet. I agree with you. Jeet 1256 basically indicates that he likes LPX at this price. I believe that's a good. I agree with you. I agree with you, Jeet. It's definitely. I think it is a good place. It's a great stock, or at least for right now. I mean, the commodities areas, the timber area, they've been doing it fantastic. So that's kind of where you want to look for your potential buys, is in the areas like the timber area, possibly oils. Oils are doing very very well, and maybe and maybe some of the other ones like that. So that's a very good call. All right. So okay, this is a question from the QQQ. Well, the QQQ I'm still holding QQQ. This is a little bit more. I do think it will move up. I probably will be out of this one, but it's moved fairly nicely today. And after hours trading, it's up, not a lot, about 22 cents. But the fact is, it's changed a little bit. Of changed its direction. So it looks like we've bounced off the 50-day moving average. So it probably will pull back up, basically to about the 338 level. I would probably be a seller right before 338 because it seems like it has resistance at that level. So, but that might be a good play on the Qs. Right now the Qs unfortunately are weak, and but they're still the Qs. So, look for this to move up to about that 338 level, and then I would probably be a seller if I'm holding now, and then wait to see how it trades. Okay, great, good. Call spread on WMT bullish play, sold a Tesla call. Hey, nice, nice. I think that's very good. That's very good. Yeah, call spreads are a great way to go, especially in a market like this where it's difficult to find direction. And I think that's a very, very good bearish play taking. I think you're right to be bearish on Tesla right now, at least in the short term. At least in the short term. But I think a call spread can be very, very good. Now, you want to be careful with Tesla. You want to do the call spreads probably and not the put spreads, because you don't want to get put the stock, because it could be very painful if you have to shell out about $70,000 a contract. That can be very, very painful. But I think call spread strategy, I think that's excellent. We're starting to, Tesla is moving lower, and I think that's potentially a very good strategy. So thanks for sharing with that. Let's look at the XRP, and that is in the ETF XRP. Okay, well it's not letting me see it. XRP. So this is the Spider Select, I think. I'm not XRP. That should pull up XP. I can't remember which the Spider Select is on that. So let me see if I can get some here. X, of course, X is U.S. Steel, but oh gosh, I can't. Unfortunately, I can't give you a good readout on that one. Sorry. XRP. Yeah, I don't know why I'm not getting that one. I'm not getting that up. Um, I, I unfortunately XRP does not pull up on my system. So maybe I have it wrong. XRP. XRP. Yeah, it's unfortunately symbol's not recognized on that. So unfortunately, that's kind of this. That's it's giving me this error symbol not recognized for XRP. So I'm sorry about that. I cannot do that one. What do you think about Activision? ATVI. Now this was a really good area about 6 months ago. I don't know. Right now, there's been some disinvestment in this sector, so I think we have to be a little bit careful in this area. And it looks like it's pulled up above the looks like it's pulled up above the 50-day moving average. That's looking pretty strong. There is a trend. Let's draw the trend line. I'm going to go to the weekly chart to draw the trend line to see if we've broken the trend. Well, we'll go back to the daily chart. Let's see if we've broken the trend on that. No, we're still not there, but I do like this relative strength line that's moving up. So I'm going to set an alert on that trend line. I probably would not be a buyer at this point, even though it's up for the week $1.77. I probably wouldn't be a buyer, but I do like this action on the relative strength line. As you can see, the relative strength line is improving. It went through some very nice earnings. It's up 29% on the earnings. I'm still not convinced, though. I want to see it move above that trend line, above that reversal line. So I might consider buying a very small position at at about 95.50. But I wouldn't buy before there. So right now with Activision, I think you've got to be on the sidelines until it shows some more strength. This one could be a very good area. There's a little bit of concern here. The computer software gaming area has fallen extremely in terms of its strength. It's 167 out of 197. That is an issue, and I want to kind of show you. There's been some disinvestment in this area, so I think it's tough. I think this is a tough area. I think this is a tough area to be in right now. So let's see if I can kind of put that together for you. Okay, so let's look at the. I want to let's look at these groups here. And there we go. Okay, so I want to go to the group. Let's see. Am I going to get the right group? Okay. Goodness gracious. Well, it's okay. Dillard. That's interesting. Dillard's. Okay, so I'm still not getting the groups. I don't know why it's not bringing it up. All right, I should be here in just a sec. Nope. Okay, for some reason it's not letting me. There we go. There we go. Industry groups. All right. So hopefully I'm gonna take a look at the strength. There we go. Number of stocks, group rank. Okay. The reason why I'd be a little bit concerned with Activision is because Activision has a very low group ranking. The group ranking is now about 167, I believe. Yeah. Okay. Let's see. I'm moving down here. It's about 167. All right. Okay. Yeah. See, this is the group right now for computer for that the Activision is in. It's not a very good sector, and it has fallen tremendously. Just very, very, a very short time ago, this was the 50 3 months ago, 6 months ago, this sector that the computer software was in was the 55th best sector. 3 months ago, it was the 95th best sector, and now it's the 157th rank sector. So right now, the movement of the capital is out of this sector. So that's why I'd be particularly careful with entering a position in something that is in this sector. So I would be very, very careful. I probably would not do anything with that. I just would do it with Activision. With Activision. Let's look at CSCO, Costco, and CSCO. If we can get a Cisco. This is a really good one, Kate. By the way, thank you for bringing this up. This is definitely kind of one. This is what is old as new again. Cisco Systems has been doing for the last 20 years. Cisco Systems has been in a funk. This is what happened about 4 years ago when I started buying Microsoft. Microsoft had not achieved the same level of price that it had achieved in 1999. It took 17 years for Microsoft to get back. That's what I think is happening here with Cisco. As you can see, its all-time high was basically up here, basically at about 75. Of course, this is adjusted for, but looks as if the last time that we had it sort of a rally was in 2018. It's now coming up to that level. So if this can move above about 60, I think we might have something going there. Let's look at the weekly chart. This is the level that I think that if it can move beyond about the 60, I think we might have something going. The relative strength line is starting to get better. Now, there are some concerns in this group. Computer networking is 146 out of 197. So this is not a very good group right now. And the earnings are in 12 days. So I think what you've got to do with this one, at least for the time being, and this is always, always kind of not the brightest thing. I think you have to watch this one for right now. I really think you have to watch this. So that's what I would consider doing with Cisco. It's a fabulous company, and it's a fabulous company, but I just don't think it's at a level that it's viable yet. I think it needs to move higher. It needs to be within 15% of its higher high. Let's kind of look at the checklist and see if I'm right on that. Okay, yeah, this is the issue that it has right here is that it's just. Oh, I guess it does. Percent. Oh, within the last year, it's 15% off of its high, but I still think it needs to pull a little bit higher. It's only a 55 on the checklist. I like to see at least 66 or better on that checklist. So I think you got to watch this right now. But I think it could be a fabulous stock, if everything works out. So let's look at some of the other ones. Etsy. Okay, Etsy probably is going to be a short. Oh, sorry. Etsy's an upturn. Wasn't going to the comments there. I was going to the wrong screen. All right. So Apple buy point. Okay, this is a good one. Everybody probably knows that I'm holding quite a bit of Apple right now, and I've been selling calls on it. I do fundamentally believe in the stock, but it's like everything else. It's looking like it's strong in after hours. I really believe that there's a buy point here, and I'm going to let's look for it. I do believe that if it moves above this 10-day line, it's definitely a buy point. So that 10-day line, oops. Okay, there we go. Okay, so that 10-day line currently is right about 131. So I would put my buy point on this one basically at about 131.50 is where it is where I would look. So the buy point about 131.50 is where I would really start to get a little excited about it. Now, will it pull above that? I don't know, but that's kind of what I think is a buy point based on this formation that we have here. The true that and actually that's a little bit early, to be honest with you. That's a little bit early. That's a little aggressive, but I like the stock so much that I'm willing to be somewhat aggressive on it. If you'll notice, it does have. We could draw a trend line, and this is a cheat here, but this is a cheat line. But there is the actual formal correct cup with handle buy point is 135.50. So So the correct buy point on this is 135.50, which is a little bit higher than we are. So 135.50, correct buy point. Now, the reason I said 131.50 is because I do think that that's where you could start getting into it early. But the correct buy point for Apple right now is about 135.50, and that's what the pattern recognition is saying. Is it's about at 135.50. So we're pretty close. We're at one. We're about $5 away. If we have a strong week next week, then I think we could be. It will be ready to go. Okay, Ripple. Okay, these are all Bitcoins. These are all coins. Okay, your thoughts on? Oh, okay. On Etsy. Let's look at Etsy right now. Yeah, unfortunately, my software does not track. It does not track crypto. So that's why sometimes I can't give you an answer on that right away, straight away. That's why. And I don't trade a lot of crypto. I mainly trade Bitcoin with the GBTC. So that's how I sort of have been getting exposure to crypto. Right now, Etsy is looking like it's fallen. It's looking like it's gonna. It may rally a little bit here. But it's fallen hard at the 200-day line. So I wouldn't be a buyer right now on this one. They had, look at this, stellar earnings. See, this is why earnings are so dangerous. They have stellar earnings, but yet it fell right out of because what's happening is that all of the big boys are starting to take their profits. This is why this industry sector is so important. This is 176 out of 197. So what's happening is, even though Etsy is a great company, it's just looking like it's going to move lower. And so we'll see if it can hold on to the if it can hold on to the 200-day moving average. But if it falls below the 200 minutes, rallies back to it, and then falls again, then it's a short. So right now, unfortunately, it's trading lower, and it's probably going to be trading lower for a while. That's just what it's looking like. Thoughts on Crocs? Crocs have been doing great. This is another kind of a reopening place. Like, why would Crocs? Why would a shoe company do well? Go figure. I mean, why would a copper miner do well? It's just the way. That's how it's moving in the market. It's just amazing. Would I buy this one? Well, it's not a bad one. Apparel shoes is good. This is a good sector. This is not really a great buy point, but it's not a bad stock. I mean, it's not a really great place to buy this one right now, but it's got a 100% checklist. So here's the thing: if you did buy this right now, you would be buying it extended. I'll be honest with you, and it could pull back. So you've got to set your stop loss tight. But you know what? It might be worth taking a risk on this one because it is above the buy zone. The proper stage one consolidation buy point on this one is 86.40. It's currently at 109, so it's extended. It's extended. But that doesn't mean you can't buy it. I think you got to just wait a little bit, see if it pulls back to the 10-day line. And the 10-day line is basically 100 right here. So if it pulls back to about 100 and then reverses, then that's how I would buy it. It's a good stock. It's a very good stock. Everything is looking good on it. It's in a very good area, and I think they're going to do well. But you don't probably want to buy it at this level. It's extended. 109, it's extended. The true buy point is really down here at about 86. That's the true buy point right there. You possibly could buy it as high as 100, but I want to see it bounce and reverse off of this 10-day line. So, very aggressive, bounce off the 10-day line. Otherwise, you're probably going to have to wait because, unfortunately, the last great chance to buy this one was basically basically about 2 weeks ago in April. It was just at the absolute right level, at about 86. So that's an interesting one. It's great stock. You should watch list it and get ready to buy it when it's in the right area. All right, this is the last question because we're right at an hour. What do you think about Alibaba stock? Alibaba was great last year. It's kind of like that's the thing about the stock market. It's sort of like everything is great and then it changes. And Baba has not been getting the kind of love that you know that it probably is due. But right now, I wouldn't buy it. It's trading below. It's trading below the 200-day line. I just don't like to buy stocks that are trading below the 200-day line. Now, why am I so obsessed with these lines? Well, this line here is how the stock has been trading for the last 200 days. It's now below that, so that means that that the price is retreating from its high. So I don't really want to buy below that line. I really don't. I think it's dangerous. Also, the stock really the time to sell the stock to sell Alibaba was when what they call the golden cross happened. That's when the 50-day line. Sorry, the death cross happened. That's when the 50-day line moves below the 200-day line, and that was back right here at the end of February. So that was the best time to sell it. Was about right there in the last few in the last year. So right now on Alibaba, I just think you gotta. I don't think it's viable right now. I think you gotta be really careful with it right now. It's not performing very well. So you don't really probably want to be in Baba. Okay, well we're at the end of the show today. I'll be back on Monday, but I just wanted to show you for anyone that wants to take a look at kind of this kind of the spreads and all that kind of stuff. I do put several of them outside of the paywall, and that's easy to get to. Just go to www.vinny.com/u/Dallas Trading Floor. And also, if you want to get on the action trade alerts, it's super easy to do. You could just go to youtube.com/Dallas Trading Floor. So until um, until next week on Monday. Happy trading, everybody. Stay safe. And the market is changing. It's moving kind of from the techs into some of the old economy stocks. And so now is the time when you want to be a little bit careful about the stocks that you enter. And we're going to have some good trades, hopefully available on the action trade alerts as well. So I will see you on Monday.